Yeah.
Your UK will is primary, and you have a separate will for your US assets.
Mm-hmm.
And if that pulls those assets into a US structure, depending on the beneficiaries, that's far less problematic, as you say.
Yeah. What I think this shows, though, is people are still very, very keen to use living trust. We neither you or I, Gillian, we could be shouting to a blue in the face. We are not going to persuade people not to use living trusts. And so what I often will try and say to people is, well, what is the point of the trust? No one puts in place a living trust just for the sake of it. Let's give a bit more money to our lawyers to draft those documents, although they're always very welcome to do so. They're doing it for a purpose. And that purpose, to loop us right back to what you said at the beginning, is probate avoidance. And so what I spend quite a lot of time talking to clients about, and I'm interested to hear your thoughts from your experiences as well, is, well, what other solutions exist? Because if I can find you a different solution that gets us the same probate avoidance mechanism, but doesn't incur the same UK tax uncertainty, let alone disadvantages, but just lack of clarity, then wouldn't that solution be preferable? And usually I can persuade people that if that solution exists, let's move away from the living trust. The most common example, if we're not just talking about leaving assets via a will, because that won't avoid the probate treatment, is transfer or death arrangements, beneficiary designations, particularly on things like bank accounts and investment accounts. The US seems to be much, much further ahead on this than the UK, where every single account I seem to open, I have the option of naming some beneficiary of the account when I die, and so the account automatically passes to them. To my mind, that is a much more straightforward solution. It has the exact same UK tax consequences as leaving assets via a will, but we don't have probate.